Brody. Yeah. Hello guys. This is Stan with our regular streaming session on Tuesday with Exness. So give me just a sec, one last preparation, and we will be ready to start. So yeah, everything seems to be working as I see. So you see my charts probably, and you see my face. All right. So yes, I welcome you today on the streaming session from Exness. I'm Stanislav or Stan. I'm senior trading specialist at Exness. Also, I'm a trader with experience in the markets for already more than 20 years. So since 2004, that was the first trade that I've made in 2004. Well, technology was different back then, so you didn't have fast withdrawals. And you didn't have light speed execution like you have it today, so that was pretty frustrating at times. But still, markets are markets, so they stay pretty much the same. So in today's session, we will go through the markets. We'll go through top-down analytical process in order to help you understand what's going on, in order to help you prepared for the trading week. So markets is not just about charts. So it's not that you go to charts and you recognize the pattern. So if that would be, well, patterns are there, of course. You need to be able to recognize patterns. But if that would be broken down only to patterns and only to technical analysis, so of course everybody would be doing that, and you would not be needed as a trader. So you could teach a neural network or AI to do that. So markets are a little bit more complex than that. They are more complex than just chart analysis, than technical analysis. So that's why we need to apply some context. We need to apply some understanding of what's going on, understanding of where we should play different or use different patterns, and so on and so forth. So that's why we are doing this session. So this session is for educational purposes only. That's not a trading or investment advice. So by no means it can be a trading advice, so you hold the complete responsibility like we all do. So we hope we know that. And yeah, hello Joyce. Joyce is with us, our loyal regular listener. So yeah, how are you, Joyce? So what are you trading today? All right, so without further ado, let's go straight to charts. All right, so let's go straight to charts and what we see today. So let me clean up a little bit of my trading space here in order to understand what's going on. So markets are a little bit tricky this time because yeah, now it's the end of the cycle. It's the end of the month. It's the end of this end of summer. So we are slowly transition into the autumn cycle to September. September is known as a volatile month, particularly not even September, October, and the beginning of November. So these are most volatile months, I think, within the year. So we've got to be prepared for that. But sometimes it starts in August. Sometimes big market moves starting in August. This time, however, that's not the case, because if you take a look at the American dollar index, no big development since the last week. So you recall what I've been broadcasting to you last week. So last Tuesday, so nothing has changed here. So markets are going completely sideways without any significant changes. So whether it's American dollar, gold, or anything else. However, of course, we did have some spike for gold. We did have some spike for gold last week, so because of speech of Jerome Powell, who actually pointed out that the interest rates still can be declined for one step, 1/4 point within the next meeting of Federal Reserve in September. So that's why we did have this big spike for gold. So there was not a big, so there was a big, sharp move, but it didn't have the fast continuation. So some continuation we have today, but the continuation is not that fast. So I was expecting a little bit of a more aggressive rally, but that's not what we see right now. So but still gold is bouncing off the support. It's still bouncing off the previous low, so which is pretty good. So it confirms the bullish trend. The trend is not very strong, but that's how markets move today. So they don't move in the very fast, in very high volume environment. So that's what is driving the markets today. So let's quickly look at the change of the open interest and volume for gold futures. So CME Group is the best source of information that we can have, speaking of volumes and open interest. Because usually the volume that you see in any other terminal, so that's a tick volume or different aggregators, they have different sources of volume. So what we get from CME Group is completely objective. So that is information recorded for volume and open interest from futures trading. So, but as you see, we did have some spike on Friday. Volume had jumped from 135,000 towards 204,000. So almost twice the growth. So 70% of growth in daily volume. Now it is even lesser than that. So the volume had diminished. So that means that basically markets are sporadic. They're fast. They're aggressive, but they are not sustainable. Moves are not sustainable. However, that does not mean that the trend is over or anything similar. So trend might continue going up in a sporadic way. That might be frustrating for day traders, but that's how markets move today. So it just, it jumps immediately at the beginning of the day or in the nighttime. Then the rest of the day it's standing, sitting on the sidelines, it's just consolidating. It jumps on the news. The rest of the day, the rest of the session, it's consolidating. So that's how markets are behaving today. So you might be prepared for such kind of action. So accumulation is here, but that's how it works. It spike to the upside, the consolidation the rest of the day. Spike of the upside to the upside, consolidation for the rest of the day. So being a day trader, being a scalper, if you want to ride this move, if you want to become a momentum trader for gold particularly, well, that might be pretty frustrating because most of the time it's just, bounces back and forth in a small range, capturing stops. Well, it doesn't capture any stops, to be honest, but it just, it finds the lack of liquidity. Liquidity is not enough, so you have the buyer, but liquidity is not enough to sustain the move going instantly to the upside. Yeah, so let me read the chart a little bit. Good morning. Pedity, is with us. Yeah, so, I will read chat from time to time, guys, and yeah, so don't forget to ask your questions if you have any in chat. I will be more than happy to answer if I can answer the questions. All right, so that's the behavior of today's markets, right? So let's go to barchart.com and see what had happened or what had changed in the commitment of traders perspective. So we're going to the futures tab, commitment of traders. So that's the biggest aggregator of the data from the Chicago Mercantile Exchange and the CFTC, which is the Futures Trading Commission. So when you trade commodities, specifically gold, platinum, silver, palladium, you name it, even crude oil, so it makes sense to watch the recording of the futures, because futures market is basically this major source of information when it comes to trading commodities. I mean, speaking of volume and open interest, of course. So what do we have here? So commercial traders position is going sideways, going flat. It's not changing actually. The same stands for large speculators, which don't move to any direction, in any direction. So all right. Now the next thing that we will see is the change of probabilities for interest rate for September. September is the next meeting of the Federal Reserve, September 17th, as you see. So you see that 15%, so it's pretty much stacked already. Probabilities are pretty much stacked that the interest rate will go down. If we switch to historical, we see that, well, it tried to jump actually, but then later on, so the market stabilized. The probabilities have stabilized. Though yields of government bonds are not moving much. So for example, treasury bond yields, the long bond yields, they're keeping steady at 4.9% level, which actually gives dollar some support, gives the American dollar some support. So if they would have gone down substantially, that would have given some support for indices, for gold. However, they still get some support. They're in a trend in bullish markets. But market is pretty tight, even though the interest rate is expected to go down. So yields are pretty tight. They are moving up. And another thing that I want to point out for today, which I think is pretty interesting, that yields of bonds of Japan, they have peaked, so they have established the new peak, so 3.2, 21%. That is a new historical peak, meaning that despite the decline in yen, so you see that it continues to go up and up and up. So basically, that might be the result of, so the money may flow back to the yen. So yen is pretty strong here. Not immediately, because American dollar is also pretty strong and other currencies are also pretty strong, but the yen is keeping strength, which is pretty remarkable. So it goes to 3.2%, so substantially larger than the interest rate itself. So yen becomes less and less low yield currency like it was before. What else? So let's go through the calendar. So it's important when you prepare for the trading day. So the next best move that you can do is to move to the economic calendar and to see what is going to be published today. So not every piece of the news is scheduled for the release, because sometimes, Donald Trump tweets something, or anyone else anything else happens. But scheduled economic publications are very important to know when they are going to be released, because you want to avoid volatility. You want to avoid being caught by sudden volatility. So today is Tuesday, August 26. My time zone is basically UTC +2. So, but that's GMT. So let's quickly scroll down. So today, not a big deal. Durable goods orders for the United States, not a super important indicator, I would say. What is more important, probably the speeches of Fed members. Fed Barkin speech, for example. Some speeches of, from B, from Bank of England. And yeah, so that would be the most important. So now, scrolling it down to Wednesday. So traditionally, we have crude oil statistics here. So crude oil imports change, stock change, petroleum status report, and all that stuff. So which is usually important for crude oil. Crude oil is actually driven, so it's rebounding. But the overview for crude oil is looking down, basically, because the production is increased by the OPEC plus members. But we'll go through that later. What else do we have? So other than that, on Thursday we have some PC index, PC prices, GDP growth rate, very important. So the second estimate for GDP. So basically GDP, if you haven't known that, it's published in 3 iterations: the first estimate, the second estimate, and the final revision. So now it's the second estimate, also initial jobless claims. These are not super important indicators. GDP might be one of the important ones, but initial jobless claims is not an official, actually, source of information. The official source of information is NFP number. I mean, the most important is NFP number. Also, what do we have? On Friday, we have, I guess, Michigan Consumer Sentiment Index and PC Index publication. That's very important. That's called the Fed's inflation. So as you see, we have a bunch of different publications this week, but I think also the one that we should not miss, especially if you trade, Bitcoin, stock indices, stocks, it would be NVIDIA earnings, which are going to be published after the market close on Wednesday. So let's quickly go through that. So why is that important? Because NVIDIA is the main benchmark for AI technology. So that's the major firm that, where is that, by the way? So let's put it here in TradingView. So put in here NVIDIA. So you see earnings date. Earnings date is 27th of August, which is Wednesday, after the market close. So don't be surprised if you see large moves on NASDAQ, on S&P 500 at the end of the day of September 27th. So don't miss it, guys. So that's very important. That's very important. Sometimes traders overlook that. They say, oh, what earnings that? So I trade currencies, I trade anything else. What earnings does have to do with my trading? But actually it does, because NVIDIA is a huge thing. And if, for example, it misses expectations, it may go down, NASDAQ may go down, American dollar can go up, and it may influence the currency markets, so all markets combined. So you got to be careful about that. You got to be monitoring that. So you got to at least be prepared for volatility to come up. All right. So basically, the most news I concentrated within Wednesday to Friday period. Not very huge, news releases. I mean, not very significant news release, but still we gotta be monitoring them. So for the beginning of the week, we have slight tightness of the American dollar, not very tight, I would say, because probabilities of interest rates are pointing down. Yields are keeping high. So I would say that the American dollar might have some support, but not that significant like it might be, right? So it's basically the sideways market, nothing is going on. This market loses volatility. Let's quickly take a look at average to range indicator. So ATR, so it measures volatility. So let's put it to 20 parameter. And you see that it slowly loses volatility. So it's still far from the lowest levels, but usually trends start when volatility gets to the new lows. So that usually happens. All right, so yeah, what else do we have actually any moves other than gold trying to break, other than stock indices trying to break? What I want to note, or what I want to pay your attention to, is NASDAQ, which is US Tech Index, trying to rebound from the previous bottom, which it was established right below the 20-day moving average. So that's not a huge point yet, but it might be pretty interesting. The same stands for S&P 500. So the market remains to stay in an uptrend. So if you remember, if you've been on the previous stream, so you remember that I was pointing out the possibility to buy Dow Jones, right? So we've been buying Dow Jones. We've been monitoring the situation for Dow Jones for several days in a row, for several times within a week. So our agenda was to try to take the breakout, right? The first breakout was here, so it was failed. If you play it correctly, so you don't lose money here at such situations, so because the market is going up, you cover part of your position, or at least you place your stop loss to the break even. The next one, the next one would be on the breakout of the consolidation area here. Why am I pointing it out like that? Because that's a consolidation that we see actually. So on Friday it was broken, and market immediately had skyrocketed ahead of the Powell's speech. So finally it had moved to the new high, just as we anticipated. Exactly as we anticipated. So let's try to figure out whether Nasdaq or S&P 500 or Dow Jones can move to the new high. So for that, we're going to TradingView. Let's try to build a spread between technological sector and industrial sector. Let's try to build that. So currently it's not oversold, I would say. So it still hadn't touched the 2 standard deviations level, the Bollinger Bands line. So meaning that Nasdaq is still might not be oversold yet. So that's but that's a concerning situation, meaning that Dow Jones was outperforming Nasdaq for the last week. So rotation might happen. So meaning that Nasdaq may rebound more significantly in this particular case. So let's put another one. So let's put, for example, Nasdaq versus S&P. So let's put 2 ETFs, QQQ versus SPY. With that, of course, we see the different picture. So Nasdaq is oversold in comparison to S&Ps, right? So it's still at the bottom. So it's still it had touched the lower boundary of the Bollinger Bands, which is a 2 standard deviations level. So if you ask me what I would trade this week in terms of stock indices, in terms of American stock indices, I would choose Nasdaq rather than Dow Jones, because I think that it's not a good option to continue, chasing the market when it had established the new peak. Though it might still, test this peak again, something like that. Maybe it can continue even higher. But if you want to build a reasonable swing trade, so I think that so you might stick to Nasdaq, even though it might not be urgent. So the move might not happen, just today. So I would wait for maybe another bullish day to appear here from the support, and I will continue moving higher from this point. So that would make a lot more sense to me. But of course, you already know that NVIDIA earnings will be the highest uncertain release here. So in case NVIDIA earnings will be good, so Nasdaq will skyrocket here. And I assume that it will be good. So let's try to check the expectations for NVIDIA. Okay, so what do? We go to Google, we put here NVIDIA earnings, basically. So you will see the first link to Nasdaq, the second link, third link to Nasdaq, nasdaq.com, NVIDIA Corporation common stock. So yeah, what do we want to see? We want to see this one, earnings per share expectations, estimated and reported. You see the estimation of earnings per share, EPS, is always going up. So the market is all consistently expecting the stock to outperform expectations. So it goes up and up and up and up for the third quarter 2020. So now it's gonna be the third quarter of 2025, right? So what else? Estimated EPS is 0.94, which is higher than the previous one, which is 0.8. Then it's gonna be 1.1. So market consistently gives credit to NVIDIA, thinking that it will post greater than expected EPS. Previously, the EPS was lower. You see, the reported one was 0.77. What will be this time? So if it will beat expectations, for example, if this blue bar will be greater than the previous one, so Nasdaq will skyrocket immediately. Because AI sector is the one that still, continues to outperform all other sectors. That's kind of hot. Situation might, but it might miss expectations. So what happens if it misses expectations? So we might have another situation. It might not skyrocket, it might consolidate here, it might reach the previous bottom here, right? But it's not necessarily bad. Because if it rebounds from this level, so it may still continue going up because the trend is still bullish. Because now we don't have yet enough bearish pressure here from this level, so it's still in an uptrend. It's still in an uptrend, and to confirm that, to check it, so let's go to CNN Fear and Greed Index. It's called Investor Sentiment. Of course, it's not in extreme greed yet, so it's greed, but it's not extreme greed. Let's see what had improved, because last time, the previous week, it was in a neutral zone. So momentum it's neutral, basically it's consolidating. You see, momentum is neutral. Most of stocks are consolidating, they're moving sideways. Strength, stock price strength is relatively good, not particularly perfect, but relatively good. Breadth is still neutral, but not that bad. It's not bad, meaning that it's improving a little bit. Breadth means that a lot of stocks are performing well or not well. So if breadth is high, it means that the bullish market is distributed evenly across all stocks, across the all marketplace. It means that a lot of stocks are growing. In our particular case, it's not the case yet, but it's not declining. So it means that most stock indices are climbing. Put and call options ratio is in a greed zone, so that's okay. So market volatility is still low. Volatility is still low, and it's keeping low for the long time. So you see VIX, which is a volatility index, so it's keeping low. But also I will draw your attention to the fact that, let's put here the so-called date range. 12 bars between the spike of the volatility and the low of VIX. So usually it's like between 12 and 26 bars something ish. Now it's 17 bars. Now it's 17 bars. So that's how the cycles work in VIX. For example, 30 bars, 17, 20. Here we have 18. So the average cycle time fluctuates between, I would say, 18 and 20 to 30, or 12 to 20 to 30. So now I would say the cycle is maybe completing, but it's not over yet. So it can easily go to 27 to 30. So the bullish market can easily translate into 1 more week or 2 more weeks. Because when volatility is, dipping, it's making a new dip. So usually that's associated with the bullish market. So that's another another angle to view at the market, right? So you are not just watching at the charts itself, so you're watching the conditions. That's called the conditional trading. So what does that mean, conditional trading? So you watch market conditions, and if conditions are favorable for the continuation of the trend, so you might pick some trading opportunities in the marketplace. So that's how it works. Volatility is one of the big factors how trends actually perform and how they sustain. So that's not a huge deal, but according to statistical studies, now 85% of probability that the VIX is going to make a new dip, meaning that probably this week, next week, we might have the continuation of the bullish market. All right, so let me read the chart a little bit. Streaming, a gold, Bitcoin, US 30, is that Joyce? All right. Market again seems to spike on the Asian session and pretty slow the rest of the day. That's exactly what I've pointed out, right? What could be the cause of this? Well, that's cause of not enough participation. That's simple. On the European session and the American session, investors are sitting on the sidelines. That's August, it's summertime. Most investors, at least if they see the fundamental reasons for getting into the market, so they might sit on the sidelines and wait for the more data. So they don't have enough data. They don't have enough drivers. They don't have enough confidence to enter the market. So Asian session drives it higher. Can I get copy trading from you? Oh, sorry. No, I don't think so. I don't do any copy trading. All right, so let's move on. So speaking of that, so I'm thinking of potentially being long Nasdaq, maybe not necessarily, but when we have the bullish day, that we might get long Nasdaq. So how this can exactly be translated into the trade? So now, yesterday there was a second day. So there was a first day up, there was a second day. You see that usually we might pick the points where the market is at the bottom of the trading range. So that's a trading range, particular trading range, was established on Monday. Volumes were trimmed, volumes were muted, so not a big deal. So now again is the third day. It's at the peak. So now we are coming to the American session. It's at the peak. So maybe we can think about this zone, the zone below the Bollinger Bands. So if the market drops here, then it reverses. That might potentially be interesting to establish the long position. So particularly, by the way, so how else you can time your trade? So if the market drops below this line, which is the line of the formation meaning it's a trading range, intraday trading range. For example, it drops immediately, it tests this level, reverses, so that might be the level of your participation when you can enter the position. But you got to be careful because the market is volatile, so the downside move may be aggressive, maybe very, very aggressive, so you don't place tiny stops here if you don't want to be whipsawed, especially for Nasdaq. What else do we have? S&P 500, S&P is the same situation, is the same, also trending market in the long term, digging deeper right now, standing at the peak of the Bollinger Bands. So if it, spikes down, be careful, it might be aggressive, but when it settles, it might become actually the pretty interesting point for entry. Because you're not supposed to buy the dip immediately after the sell-off. That's pretty dangerous. But when it settles, when it moves, when it pulls back, so that might be your entry point. Something like that. Because market is still bullish, so you might find a dip here. So you may ask, is it a good idea maybe to, buy here? Maybe the market will skyrocket on the American session. Well, you might try to do that, but that's a momentum trade. Momentum trade means that you jump in on the peak of the price, even if it looks like a low price, but you jump at the peak of the price. Usually, statistically, you're about to get whipsawed. Market may revert back to the mean, consolidate, even if it goes higher. So that's it's not a perfect entry point, at least for the day trader. All right, but still you see that we are referring to the possibility of the continuation here. But again, guys, so let's not forget about NVIDIA earnings. NVIDIA earnings is a huge thing here, related to Nasdaq, related to S&P 500. Let's not forget about that. It may reshape expectations pretty significantly. Because ahead of NVIDIA publication, volatility in the market, I mean, overall volatility remains high. Options volatility. So markets are awaiting bigger moves, so they're nervous kind of. They don't, big money stays out of the game. So when earnings are released, so it's, kind of making the big move to whatever direction. We don't know exactly in which direction it may go, but then it might skyrocket. So if you want to play earnings, so you got to be, it's pretty risky. It's pretty risky entering the position ahead of earnings. But still you can do that if you place a pretty decent stop loss, not a tiny stop loss. You can still continue doing that. Okay, we got a Botswana here, Tanaka, right? Or Tanaka? Oh, hello, Botswana. So yeah, a lot of traders are watching us from Africa, which is good. So we are welcome every trader from every region here. So by the way, invite your fellow traders here. Don't keep it just for yourself. So send a link to your fellow traders, subscribe to the channel, give us a like. We'll appreciate that. That would be good if you put us a like just right now. All right, guys, so let's move on. So as we've gone through stock indices, gold a little bit, so let's move to currency pairs. So what happens with currency pairs? Euro USD. So Euro USD was pushed down yesterday, so on the rise of the American dollar. So you see that's totally consolidating without any significant developments. That's a sideways market. So, well, that's a no-brainer. So you don't need any streaming sessions to see that it's a sideways market. But it's a good question whether this sideways market will break to any direction or not. So usually the more narrow trading range is, the more extended the breakout is. But this sideways market is pretty short term right now. So it goes since August 6th, which is not a huge deal yet. It may break later, but it's just not a huge deal yet. So it's 20 days, it's 3 weeks in a row. Maybe finally market will break, but we don't know in which direction. So currently there are no narratives. You see no changes in the interest rate expectations, no changes in the bond yields, so they're stabilizing. So with bond market and the debt market stabilizing, meaning that the capital is not flowing. So you see the stabilization, so it's going sideways. Capital markets are not moving. So of course we don't know in which direction it will break. All right, so but we will watch GDP publication on Thursday. We will watch PC index publication on Friday. Maybe the market will shake from this level, but currently I don't think that's a huge opportunity. What interesting do I see here is Bitcoin actually, because despite the decline, it's still standing below the static support level, which is this area, 112,000 area. And given that we still have the pretty strong uptrend, so it's not over yet. So basically trends usually don't stop this way. First they turn into sideways activity, something like that. Before completing the reversal, they turn into sideways activity. So what I would be monitoring for Bitcoin, I would be monitoring for the closing bullish day, for the one closing bullish day. I know that's scary, especially if you see Bitcoin plummeting down. ETH had plummeted 8% yesterday, something like that. But this time we will not focusing on ETH, we're focusing on Bitcoin. And here's why. So going to spread between Bitcoin and ETH, you see that it's again dive into the new low, dive into the new dip. Here's why. So that's what's happening here. And well, rotation should be logical here, so it should not go down indefinitely. So ETH might go down more aggressively, and by the way, that just started yesterday. Okay, you see that spread had started to go up. ETH started to go down more aggressively than Bitcoin. All right, so 8% down. So Bitcoin was holding relatively well. So I would be waiting for the bar closing to the upside. Okay, so just one bar. It may be pin bar, it may be whatever. And I just like that, for example, just like July 25th, same situation here, just like any bar here at the bottom of the swing, like it was, for example, May 5th, anything like that. So yeah, and the next day, so if the market closes to the upside, the next day would be possibly my entry point. I would be monitoring for the pullback here. So if I catch the pullback, so it might be pretty aggressive. It might provide me with the low risk in comparison to pretty decent reward. Something here. So we never know if the trend will continue. So all right, so we don't have a crystal ball. Maybe it will continue plummeting, right? Maybe it will break and then plummet to the downside. We never know that. But still, if we refer to the trend, I think trending conditions have not gone anywhere. So Bitcoin still produces pretty decent market value versus realized value. So ETF flows are pretty decent. So let's just quickly check it on the CoinGlass. By the way, you can go check yourself. CoinGlass, for example. So what can we check here? So for example, let's put here ETF flows, Bitcoin ETFs. Here it is. So you see that ETF flows, they have been negative, so but they are now cutting off. So the outflow is cutting off. So it was minus 523 million. So now it's cutting off. It's going higher. Now it's the positive that we have inflow of 219 million as for August 25th. Total net assets is 116 billion. So that's not bad. That's not bad. So what else do we have other than ETF inflows, outflows? We can check, you know, for example, what else we can check here? So let's go to spot. Let's go to spot and see spot inflow, outflow. That's an outflow from exchanges, not the outflow from ETFs. So from exchanges, you see the outflow. That's not bad, basically, because when people move their Bitcoins out of the exchanges, that means that they actually don't intend to sell it. They intend to keep it. And that's how it works. Usually when it spikes, when it goes higher, when you see this spike or the green spike here, that corresponds to the market peak in many cases. We don't have it yet, so we have an outflow from exchange. That's not a bad thing. And I think that Bitcoin is more than a good candidate for rebound. Of course, we need some market conditions. And for Bitcoin particularly, NVIDIA earnings will also influence the price action. But yes, yesterday's bar was pretty aggressive. The sell-off was aggressive. Of course, we got to keep a close eye on that and see if the sell-off continues or not. But as I say, so you need to see some participation of buyers here below. If you see that, you can try to take a risk. If not, it doesn't make sense to enter the position. All right, so that's Bitcoin. So let's go to more popular instruments among our traders, which are, for example, pound yen, euro yen. So again, a lot of consolidation. The yen is not declining nor strengthening. So we have also so currency markets. They seem to be stable right now with no big developments. I would say that the yen is getting a little bit stronger. So in this context, which we see right now, yen is getting a little bit stronger. And you see that the euro against the yen, it cannot push it higher. So that's a trading range. From the swing trading perspective, we have the downswing right now, which had started here. 1, 2, 3, 4. So we're still in a downswing, basically. It seems like a totally sideways market. That's right. But the seller's pressure is a little bit more visible right now than the buyer's pressure. All right, so that's why it's not very easy to time the position here correctly. But for example, if it elongates, if it goes sideways for a while, if it fails to break to the peak, if it still holds near the bottom of the range, so the next development possibly would be to the downside. Why is that? Because the yen is getting stronger. So don't forget, 3.2% of the yield of the 30-year bonds for Japan. So that's a new peak. That's a historical peak. Money goes back to the yen, at least to some extent. So at least they don't see, so the carry trade operations, they are shrinking a little bit. So that might be the potential continuation here. But in order to get to this position, you need to find a confirmation. You need to be sure that the market will not be able to break through the ceiling, through the resistance. So if you see that it fails, if it goes back again to 171, for example, that might be invitation to go short. That's euro yen. Euro feels a little bit weaker right now in comparison to pound. Pound yen might be slightly stronger. So you see that it's stronger. It holds near the support. By the way, we've been pointing out this strength of British pound on the last streaming session. We've been awaiting the market to come back to the support. That's exactly what it did. So it came back to the support. So the support, I mean, the reaction is pretty modest right now. So it's not moving much. The reaction is pretty modest. So, but still, if it holds the support, so it can maybe break it, and that might be the case. So by the way, in order to understand this more precisely, we might build euro versus pound spread, which is also the currency pair. But currently it's located right in the middle of the range, so it's not at the extreme, it's not anywhere. So I don't see any big advantage over pound, you know, for the British pound over the euro. So we don't see that yet. So that's why I think that would be symmetrical. Their moves might be symmetrical. If euro yen breaks to the downside, it may also break to the downside, but it might be more sustainable. I mean, the support for pound yen may hold. That's not a huge opportunity yet, though it's a sideways market. So for opportunities, I point out stock indices for this week. Bitcoin, Nvidia is probably not. So, but if you trade Nvidia, by the way, so you can still point it out as an opportunity. Though don't forget about the earnings. So earnings might work like a gap. So market goes sideways, and then you have a gap, right? So that's not tradable, basically. So, or otherwise you have to take a risk ahead of earnings. All right, please explain USD versus Canadian dollar. All right, let's go. So Canadian dollar is displaying some weakness against the greenback. So that's obviously what we see. So swings for Canadian dollar are pretty decent. They're pretty solid. So with that, it might be the decent opportunity to take the long position. But the trade location is what matters here, because market stands right above this dynamic support, above the 20-day moving average. So I don't think here that would be the good position. So it's not sustainable, I think. But if it tests the lower support here, like that, so that might be actually a pretty good opportunity. If it breaks to the downside, if it gives you the bullish day, so you can join the next day. So I think that the Canadian dollar might display some weakness here. So, but I don't think it's now. So at least it needs to test the lower boundary or the lower support zone here. Speaking of the overall trend for USD versus Canadian dollar, so yes, it did have some downtrend, but it's now compensated by the buying activity, which was clearly entering the market since June 2025. So you see the buying activity was really substantial here. A lot of swings, so at least 4 consecutive swings to the upside. So the accumulation of the buyer is visible here. And yeah, we might continue going with this market. So trend, it's not trending yet, it's a range bound market, but still we have some accumulation. We have some signs of accumulation. Here it is, right? And it would be very logical to try to spot some rebound here. But for the trending market, let's not forget, guys, trending market is not a momentum type of market, meaning that you're not buying at the peak, right? If you want to go with a trend, you're buying at the dip, because market goes in a stair-stepping mode. That's exactly how market goes in a trend, moves in a trend. Corrects down, establishes the new peak. Corrects down, establishes the new peak. That's how market moves in a trend. If the market is very aggressive, for example, it breaks substantially above the support remains below, so you may play the momentum trade like that without any substantial pullback. So you may not wait until the pullback playing the momentum trade. But for the trading market, it pays off. It makes sense to wait until it corrects, it pulls down, pulls back. Please explain ETH, please explain NSD USD. All right, check pound yen, we've already checked that. You may watch the recording later, so let's move to other currency pairs. NSD, New Zealand dollar versus American dollar. Well, it displays some weakness even. Yeah, American dollar is pretty. By the way, it looks. I would say it looks pretty mirror as Canadian dollar to me. Australian dollar looks a little bit stronger. New Zealand dollar ticks down a little bit. So yeah, what do we see here? So for both for Canadian dollar, both for New Zealand dollar, we see the same picture. We see the ongoing pressure of the seller here, meaning that, so if it pulls back to the resistance, which is the area between 20 and 50-day moving average, so that would be completely logical and completely legit to try to sell it. Maybe not immediately, but after one bar to the downside, after it closes to the downside, you can completely sell it after it reaches the resistance area. Why is that? Because the market is pushed down, so the selling activity is currently dominating the price action. So in order to continue moving up or retracing to the upside, so probably it needs to retest lower levels to establish the new bottom, something like that, or maybe at least to retest the previous low, something like that. So at least you can, you can at least try to sell it from the resistance. That would be completely logical. All right, gold we've been analyzing at the beginning of this session, but I will quickly go through gold. I know everybody's trading gold here. All right, so what else do we have? Pound, ETH. All right, ETH, please explain ETH. Let's go to ETH. So we are conditionally trading, meaning that ETH was outperforming Bitcoin substantially, but the yesterday's bar, you see that's very big, 8% down. I don't like this bar, so that's a distribution day, obviously. So meaning that a lot of positions have been removed from ETH. Let's go to CoinGlass and quickly see the situation for ETH. Let's see spot. And we had huge outflow from the exchange, from the peak. Previously we had inflow, the big inflow. They sold it. They sold a huge amount of ETH. Then they withdrew their coins. So that's not a bad thing, as you already know. So outflows are basically bullish signs. So maybe it will not going down, maybe it will consolidate. But ETH is a little bit overbought in comparison to Bitcoin. Why is that? Because MVRV indicator, market value versus realized value. So let's check it out. If we do have here MVRV Z-score. So what I want to show you is, for example, for Bitcoin, it's relatively sideways, right? So it's not overheated. Price is high, MVRV Z-score is not high at all. So it's 242, which is decent, for ETH, so let's see if we can see the MVRV Z-score for ETH. I don't know if we have it, but we might not have it here. It's only for Bitcoin, right? All right, whatever. So for ETH, it's higher. It's at the peak. So that's why I'm calling it a little bit overheated. And the spread between Bitcoin and ETH also is standing at the bottom, so meaning that the rotation might happen here. So I would be very cautious, very skeptical about long for ETH right now. So I think that this move might be over. I would be very careful about that, trying to take it. So basically how that translates into the trading opportunity. So if it rebounds, for example, if the rebound is unsuccessful, if it doesn't hold the rally, so later on it might continue going down. So you might even play a short position later if you see that the attempt to break out is unsuccessful. But currently I would not touch to buy ETH currently, even though it might look like a good opportunity. So that's not what I would do, because that might be already the rally which is over. But for Bitcoin, the situation is different. Bitcoin might still have some capacity to go higher. Again, gold. All right, so let's go once again through gold. Gold. So gold had rebounded on Friday, as you already see. So, and it's keeping the momentum today. Volume is pretty low on gold. So as you see, it works like the sporadic, fast accumulation here. So it jumped on the news. The rest of the day, it's sideways action. Jumped early in the day on the Asian session. The rest of the day, it's sideways. So obviously that's a trending sign. That's a trending sign. That means the gold is being accumulated, but not very quickly. And also I was pointing out that the volume is falling for gold. So interest for gold is falling. If you see the GC futures here, gold futures contracts, volume and open interest, you see that the volume had reached yet another low of futures. So it's not really interesting for the people. So the last point, this last similar point was in July 18th, 134,000 contracts. Now it's 107. So it's the lowest point probably within the entire summer. That's not bad necessarily. It means that traders are losing interest in trading gold. The instrument is losing volatility, and nothing is really going on here. But sometimes it happens before the big breakouts. That doesn't mean that, okay, so it's not interesting, let's not trade gold. No, that's nothing like that. Sometimes it loses volatility ahead of the big news. I mean, ahead of the big move. You see, that's how it loses volatility. It loses volatility. ATR is moving down. It's not at the bottom yet, but it's close to that. So what we can say about that? So will it shake out from the range or not? So it's incredibly difficult to time the market to predict the beginning of the big rally. What I did for gold, actually, I was trading it on Friday, but closed it pretty quickly. So I've opened the position here. I closed it at 67. And that's it. I'm out. That's what I'm doing for gold right now. If I see the setup, I'm going into the trade and I'm out on the target, on the intraday target. I don't hold positions for gold right now. So if you ask me what to do on gold, so well, if you believe that the market will shake out from this range, you can get into the position. But it's incredibly difficult to time the market. In other words, it can go like that for some time. You know, such type of action, such type of price action may last for some time, and that would not be surprising at all, because market needs liquidity, market needs volumes. There is no volumes right now. Volume is dropping, so nobody wants to buy gold right now, so there is no enthusiasm in the market yet. But that might be over maybe in a week or so. So when we transition into September, so that might be over, but I don't think we're there yet. However, the first signs of accumulation, the first signs of buying, they're still here. So it's no longer going down. It positively reacted to the Powell's speech, so that's another bullish factor. Now let's watch for some publication of the data within this week. Maybe you can find some entry point again. So if it breaks through the range, maybe you can find some entry point again like that, for example. But I would not be very active for gold. If you are actively involved in day trading, scalping, so you're probably about to lose money here in this market, because it's not going anywhere. It's not going anywhere, okay? So yeah, I guess that's pretty much it from my side for this week. So thank you guys for coming. What made gold to move aggressively in the Asian session? Who knows? Some buying. You know, Asian funds, they sometimes they just hit the market, and that's what they do. There are a lot of investment funds from Asia, Chinese funds, Asian funds, from Southeast Asia. So they just hit the market and they buy a lot of gold futures or silver futures at even options or swaps. They operate usually with the leveraged products, and market just skyrockets. So this session is illiquid, so it's not very liquid. So when they pull into the market a large volume, so market just reacts and it goes higher. Why is that? Just because they wanted to buy it. No reasons, no particular reasons for that. But on the European and American session, volumes are dropping, so they are not supporting this move. But at least they are not distributing, they are not selling, which is also a pretty decent factor. Well, let's see later what will happen here. So maybe this cycle will be over. That's a classical summer cycle with decreased volatility, decreased participation. So that's a classical thing. All right, guys. So thank you for coming. Subscribe to Exness channel. Give us a like. Come next Tuesday. No, we will not do the session. So that will be the break. But I guess on the second week of September, which is September 9th, we will continue with our sessions. So yeah, trade well, manage risk, and good luck. So see you later. Stay with Exness. Good luck.